Hello everyone, welcome back to Chill Trades, the most accurate stock market channel on YouTube. Today we're covering MAPS, which is just call it Weedmaps. I don't need to do the official name. Weedmaps is a stock that we cover quite a bit on the channel, so if you like Weedmaps, please sub. I want to leave your comment. I want to know what you think about the company. It's sold off pretty decently recently on earnings. So we kind of want to dive into the earnings, how the company is looking. Is it still a stock to consider for the long term? And is now a time to buy? So we'll look at the charts to figure out the prices. So first thing I'm going to do is just an overview. These are things that we typically look at, pros and cons. So main thing I want to call out here is even though this PE ratio might be incorrect due to such a big net income increase this quarter, which is not going to go into the next quarter, we are seeing profitability for the company when it comes to net income. So they are going to start seeing a PE ratio. This is positive. Here's a pro for the company. There's some cons, but there's a pro. This market cap is incorrect. It's actually around 500 or 600 million. If you do the shares, 63 million times $8, it's more like 500 million. Please confirm if I'm right or wrong on that, please. But I believe it's around 500 million, not a billion. But let me know in the comments. Insiders, I love to see that. Institutions, 60% ownership. That's good to see. And not a huge short float. So even though the stock is selling off, there's not a whole lot of shorts piling into it, which is a good thing. Let's just do a very general overview of the finances, and we'll dive into a little bit more later. But main thing is we see this big bump in net income. They already said next quarter it's probably going to be back to more this 3 to 5 million range. So this is kind of out of the ordinary. But we did see growth year over year, only 9%. And we'll talk about it more, but that's the main issue. After seeing this big pop off in 2019 and 20, it's starting to level out. And so what we really need to see in 2022 is for that to start accelerating up again. They might be making moves to head that direction. We'll talk about it, but those are some things to keep an eye on. Cash on hand, 77 million. I think it's a little bit more actually on their income statement, which we'll look at. But this is a big warning to me, and we'll get into a little bit later. They are starting to acquire more companies, and I think that's how they're trying to figure out growth. And so 77 million is probably not going to be enough. I think it's like 150 million on their balance sheet, but 150 million is not going to be enough to make any substantial say acquisitions over the next 3 to 5 years. So they're probably going to have to raise money at some point. But I just want to cover some news because 2022 is going to be a really big year for legalization of marijuana, and legalization leads to more states that Weedmaps can go into, or if they're already in states, the legalization at least when it comes to recreational, more sales both from the consumer side and the business side. So we have Ohio, almost enough signatures to force lawmakers to consider. Indiana introduced marijuana legislation. Here's a con. South Dakota struck down. Republican representatives introduced motion to repeal federal marijuana prohibition. So at a federal level, I think it says to expunge nonviolent criminal charges, promote local ownership, which is really big for Weedmaps, those local shops, and places where they're not so positive is to place certain restriction on the advertising of regulated cannabis products. So that's the big red flag, and that's kind of been in worry for, I would say, the entire industry, but specifically for Weedmaps, because part of their business they've been growing out is this kind of marketplace for shops. And part of that marketplace we've talked about in the last video. Please go watch those ones where we break down more of their business model. But they're going to have advertising for these businesses. So you go on their platform. Oh, it's kind of like what are these food, the food apps where a business can advertise. They go up to the top. So the same thing doing with these dispensaries. And so this is a big red flag that this could impact Weedmaps business quite a bit. So we don't really know what this advertising regulation all the way looks like. But now I want to go into just looking at the business over the last few years. think the main thing we're calling out is growth is slowing. So we saw a decent push, you know, if we go from 2019, 2020, you know, 39, and we'll just call it to 50. And that was obviously everything shut down. Everybody was starting to order to go, just like they did with food, but for marijuana. And so the same thing happened, but we're starting to see growth level out again. And that's a big red flag. Even though the company is becoming profitable, gross profits, it's increasing. The con is that it's not growing a whole lot. And so having some red flags that might slow down growth, especially on the advertising side, Weedmaps really needs to figure out ways to grow revenue. And 2022 is going to be a big year for that. And we're going to have to see growth. If we don't see growth, then this $7 price point is probably realistic, as that's about a $500 million market cap. I don't see this company being worth more than 500 to 700 million if they can't prove growth in 2022. So that's mostly what I just wanted to look at there. So for their quarters, or for the Q3, the couple things, like we said, 9% growth. Gross profit had a big increase, but that's not going to see that next quarter. Net income, we already saw that. EBITDA was 10 million down from, so some higher expenses somewhere. We'll go into that. And the main thing we want to go, as I mentioned, is revenue expected to be in 50 to 52 million. So when we go into last year, revenue was 44 million. So 50 million was at about a 10% increase. So it's only about a 10% growth in revenue, which is just about the same as this quarter. It's really not that great. We really want this company to, their revenue to start growing substantially. So when we break down the numbers a little bit more intricately, we already kind of covered all this, so we won't go over this. We won't go over these numbers. But when we scroll down, where do we want to go? Let's keep going. Okay, so cash, 120 million. That's a good thing, at least for this quarter. Is that cash? Or is that account receivables? Sorry. Cash, 77 million. That's 12 million. 77 million. So like I said, if they're going to continue to do more acquisitions, they're going to need more cash, which means share dilution. They're going to dilute shares. And so those are things we want to keep an eye on. If they keep acquiring more and more businesses, that's something I skipped over in the earnings. Talked about acquiring 2 businesses. They're going to need some more cash. The other main thing I want to get to was sales and marketing. So year over year went to 50 from 46, but we saw marketing increase 4 million and only so an increase year over year of 4 million, but we only saw sales go up 4 million. So we're not really seeing those marketing costs or sales and marketing costs really benefit right now. And so we really want to pay attention to as some of these costs increased, what benefit are they having? General administration costs, you know, double. Marketing, just about double year over year. So not seeing those expenses go up, but not necessarily seeing the benefit when it comes to revenue. These are things we really want to keep an eye on moving forward, because we really want to see that revenue start to build as those expenses increase. Net income, this is a big pro. We kind of have, those numbers are a little distorted from this Q3, but still net income, we need more income to flow through so that this company can acquire customers and not have to sell more shares on the market. The most important thing I want to go to, we'll just go through all this, is where are we at? Here we go. So monthly paying clients. So we know they launched their platform for businesses to go on their platform. They can buy ads to some degree right now, but they also get all these other perks. They have their own POS systems that they can use. They're trying to integrate these partners. And so coming into Q4, because they just launched this, not that, I mean, I guess it's been a year, but we really want to see an acceleration of these monthly paying clients as they build out this POS, as they integrate partners into their system. We really need to see this start to expand significantly. If we can't see these monthly paying clients increase, it's going to be hard to grow revenue, because what you're seeing with, say, the DoorDashes of the world is they have to pay a lot of money to acquire these paying customers. Or where are we at? Paying clients, where's the paying customers? I don't know where that part is, but paying customers, that's really important. It's going to be really expensive, but when they can acquire a customer, you know, that's kind of like a one-time upfront cost. You know, they're on your system, they hopefully aren't going anywhere. Where a customer, you have to keep bringing them in over and over and over again. And so this is really an area that we want to see grow substantially, is these monthly paying clients, people on their platform. It's very, very important to grow that. We're not seeing that growth yet. When we go to revenue from this, 50 million. So, you know, we are seeing an increase in revenue. So these partners that they have are integrating more, but we need to see this accelerate more. This is not enough acceleration. 2022, we need to see this number. I mean, I would love to see 8,000 clients in 2022 if that's the math there. But that's looking at their finances and kind of things to keep an eye on. Next thing, institutions. So we are seeing still institutions buying. They're not buying a ton, but you know, a couple $100 million. Insiders, we did have a major shareholder sell out of some shares, 3 million, not a huge deal, but we are seeing some people taking some cash out. Let's go ahead and go to the technicals. So we know this stock is sold off wildly, and we're in oversold territory. So we're unable to break RSI above 50, and we've been going down from there. We're definitely going to see a little bit. We have to see a little bit. It's just too low on RSI. We're going to see this come up a little bit, but there's a possibility that this is going to get rejected around this 30 range, honestly, or 40 range, sorry, 35, 40 range, and come back down. But we are going to get a little relief here. If we do get a little bit of relief, we need to break above 781. If we can break above 781, then we have 815 and then 950. And this I would say, 830 to 850 range is where the 20 moving averages are. So these are going to keep decelerating a little bit, but if we break above, we could go back into that range. RSI will probably go back to around 30 at that point, and it's time to make a decision. Do we want to break higher above the 20 moving average? These are the 9 moving averages. This is not correct. That's a 9 moving averages, but look at the 9 moving averages. We still have the 20 EMAs quite a bit higher. But these are going to continue to decelerate. I don't think we're going to hit these 20 EMAs anytime soon, but look for the 9 and the 10 are around that range, which I said is around that 850. If we can get above 850, we only really have one major resistance at 878. So in the best case scenario in the short term, we have about $1 of upside, $1.30 of upside. But if we can break above that 880 in the short term, say in the next week or so, then we might be able to push up to the 20 EMA or the 20 moving average, and these will be, you know, coming down a bit from here, and we might be able to go to about this 950 range. Let's go ahead and draw another trend line to see, because we do have a downtrend here. So we did break out of this downtrend, which is a pro. We still do have another downtrend. I'm just going to call it here. Let's just call it here. So we are seeing a little bit of basing here, you know, 3 days of candlesticks that we're not able to break below, what's that price? 735. So that's a pro. So this could be basing here, and we'll see a little bit of acceleration to the upside. I don't think a ton, but like I said, at max, maybe to that 9 EMA, 10 EMA, which is around 850. So look for a push to around 850, but in the short term. Main things we want to call out here, revenue is slowing, about 10% growth quarter over quarter at this point. Not the greatest. We have year-over-year growth, but 2022 is going to be very important. Q4, we already kind of have an estimate. We'll probably hit around that 50 million. But with about 250 million in revenue, we have about a $600 million market cap at this price, and not seeing any growth is not a good sign. This valuation is probably, I would say, fair, just due to having the growth slow down. In 2022, if we do see significant growth starting to happen, then we might be able to get more in the $10 range as a significant or as a realistic price point for this stock. those are things to keep an eye on. Hope you enjoyed the video. We'll be making more. I'll be making more on this stock, so stick around.